The market doesn't care about your opinion. It only respects preparation. This week, we are sitting down with two of the most watched pairs in the Forex market, cable and the fiber. That's the GBPUSD and the EURUSD respectively. Before we open the week, before price does anything, we map it out. We are looking out where liquidity is resting, what the higher time frame narrative is telling us, and where smart money is most likely to reach before any real move develops. No predictions, no guessings, just structure. Draw on liquidity and levels that matter going into this week's session. Let's get into it. I'm going to review the GBPUSD as I told you earlier, the Euro and the DXY also. I'm going to start for the monthly because we are next Monday we are opening a new month, and as I said earlier, I've been looking for bullish prices. We are going to target those buy side liquidity. You see in the monthly, let me in the monthly, this is a higher high. Let's use this specific on the 3rd of November. You see that low on the 3rd of November, the same low on the 3rd of November, the November candlestick. You see that structure, price has swept that lower low, same to the DXY. Let's look at that in the November. You see that price has actually swept the whole entire this buy side liquidity in the DXY, and the sell side liquidity in the GBPUSD has not been swept but in the same candlestick, meaning we are so bullish on the GBPUSD. Even if the euro has done that, it has swept that lower low, we are still bullish, looking for higher prices because these are run on sell stops, then anticipating prices to go higher. The DXY price run on buy stops, anticipating prices to go lower to the sell side liquidity. That is what we're expecting going on to June, the month of June. You see, so we are going to expect buy side liquidity to be reached in this GBPUSD. Dropping down to the weekly, I'm going down to the weekly. You see the weekly, these are buy side liquidity, same to these are buy stops. You also see, let's see who's there. That's the last down close candle. Price has touched it. Now price is actually going to go higher. Let's just finish with the cable market. Going down to the daily in the cable market, that was the weekly order block. Also this is a rejection block, and also here price has done what? Had swept. You see this is a fair value gap that I've marked in the daily time frame, and this is also a swing low there in the April 13th low. You see that's a swing low, a fair value gap. This is an A plus setup, so we're going to target this buy side liquidity here in the monthly, same to here in the daily. We're actually targeting those buy side liquidity. Now I'll only put up to the 4-hour because we're going to see what's happening in the higher time frame analysis. We're going to take that screenshot, and I'm also going to tell you how many pips are these from the current price. Those are around 200 pips, and the other one is 420 pips. So we want to see if price is going to cut, even if it's 300 pips out of that 420, and see how price goes, because we're expecting bullish prices going on to June. You see here also price starts that hard time frame liquidity. Now price is bouncing back up. Now we're going to expect those buy side liquidity taken out, same to the buy side liquidity in the monthly, with that SMT I showed you in the monthly. Going down to the euro, in the euro, we're here in the weekly. You see in the euro, this sell side liquidity that I told you earlier, been swept. Then this is an order block in the weekly. You see your price went and touched it nicely, then you see it's almost touching it. But if we drop down to the daily, we will want to see something. You see also, price was inside a fair value gap in the daily time frame. You see that? Price touches that fair value gap, then boom, rally up higher. Now here in the weekly, we will be targeting those buy side liquidity. We'll use that buy side liquidity and that buy side liquidity. Going down to the daily, see that fair value gap has been priced as that. Now we are expecting more bullish prices. Those are 180 pips, and like the 200, those are 420, like the GBPUSD. The GBPUSD. Now the last time frame that we're looking is in the 4 hour. You see here in the 4 hour, the reason I'm also bullish, you see in the 4 hour, in the euro, price action was nice. You see how that price is touching fair value gap, then rallying up higher. Now you want to see how price will open in the market. You see, it has left a fair value gap. It might want to come into that fair value gap, then continue rolling up higher. But what we're expecting, more bullish prices to clear out those buy side liquidity, and also that buy side liquidity in Monday or Tuesday, but mostly it'll be on Monday. Now you see the DXY, we are expecting bearish prices since we are expecting bullish prices in the cable and the fiber. Now even if prices in the fair value gap in the weekly, I want to see disrespecting it and rallying down to these sell side liquidity. Yep, buy side going to those buy side liquidity, euro same to those buy side liquidities, these and these, and DXY going down to those sell side liquidity. And also if I finalize, you see how that price, this order block is keeping price to go lower. This is another block, price declines. We want to see it touching to those sell side liquidity, because this one was an SMT, as I showed you earlier. Looking at the 4 hour after the last time frame, you see this is a vacuum block, then price, we want to see it going there. The reason I have not told you anything, I'm only going to tell you the real thing, what I'm expecting. If I'm wrong, price will obviously go down, but what I'm actually telling you, going to this June, we're expecting a bullish June. I already told you my bias during the live sessions. You will want to see me calling the market candlestick by candlesticks, and also you see in the 1 hour dropping down to the 1 minute time frame, working with the same bias I've told you here, attacking buy side liquidity. There are some days that we're going to have down days, that's acceptable. There are some days that you will think price will go, but it will consolidate. That's the key reason of risk management. 1 or 2 trades per session, then you get out. If you found this insightful, don't forget to subscribe, like and share, comment in anything you want me to touch on. Yeah, join our community. Don't forget to subscribe. Adios muchachos.